Good morning, everyone. We will begin this webinar right now. Welcome. Good morning for those who are in the Western Hemisphere, and good afternoon to some of you that are a little bit ahead in the time. Today, we are gathered here to go through the webinar on venture capital for startups, led by Camilo Santa. Camilo Santa is a former director of the Yunus Social Business in Colombia, and he's currently the CEO of Banca de Inversión Sostenible. So before we begin and I pass on the mic to Camilo, I wanted to talk to you about some of his background. So Camilo is a business graduate with a specialization in organizations, social responsibility, and development. He's also a Master of Science candidate in interdisciplinary development studies. He has more than 10 years of experience in design, management, and evaluation of sustainable projects. He also knows a lot about generation of financial, social, and environmental value. He's a businessman and consultant for impact investing, international cooperation, cross-sector collaboration, public-private partnerships, public policy, shared value, social innovation, learning communities, use of ICTs, and strategic planning. Last but not least, he's a researcher and a lecturer in the triple bottom line entrepreneurships, sustainability, and local economic development. So Camilo is joining us today. He's going to be talking to you about, and as I previously mentioned, venture capital for startups. It's a very interesting subject, and we are very glad that you're joining us today. Before I give the word to Camilo, let me just go through the rules of the game. Camilo will do his presentation, and during the presentation, you can go ahead and type down your questions on the questions tabs on the control panel. So if you click on the questions tab, you'll have a space to make your question. We want you to make those questions while Camilo is doing the presentation so that we can read those questions towards the end when we will have a Q&A session. So once again, we recommend that you type down those questions as Camilo is giving his presentation so that you know the question you want to make, and you might forget it if you wait to the end of the session to make it. So you can, and towards the end of the session, you can also participate. If you have a working microphone, you can press the raised hand button you will see on your control panel, and that will let us know that you want to make an intervention, ask a question through your microphone. So two ways of participating. The first one would be to type down your question, and we will read them out loud for Camilo to answer. And the second one, if you have a working microphone, you can push the raised hand button, and you can also make your question through that channel. So without further ado, Camilo, your mic is unmuted. We are able to see your screen, so whenever you like, go ahead. Thank you so much for being with us today.
Hola, hi to everyone. It's so nice to be part of this, building up the ecosystem of impact investing in Latin America. Thank you for the invitation to YABT and all of the team supporting this session. As explained before, I am a former director of Yunus Social Business Colombia, the impact investing fund of Professor Yunus across the world, working in 7 regions, and now leading the Banca de Inversión Sostenible, which is this accelerator for businesses with a triple bottom line. We're searching for businesses already working post-proof in the stage of growth businesses, looking for investment. I wanted to share with you both Twitters, mine personal, Camilo, @Camilo Santa, and @BSostenible, so we can also be tweeting and and using the social networks through this presentation. The idea is to do quick overview of what is venture capital, what is impact investing, and how has it been growing in Latin America. And then on the Q&As, basically just build up a conversation which we can all, build a platform and connect. So basically, I hope you can see my screen. I wanted to start with this infography, which is basically describes how an entrepreneur has to go through a lot of different stages, and how through this river of adventures, there's different actors, different stages, different set of partnerships that the entrepreneur has to build, and risks, basically. Because when you start a business with your idea, basically it's, as we've been calling it, friends and fools, friends, families, and fools are the first relevant actors that you come across to build up and turn up your idea into a first startup. And then basically you have to get in the ecosystem and start playing with other set of actors, like the seed capital funders, all of these challenges like YABTs, formers challenges on startups, and you can get funded on basically on the first 20K. I'm gonna use this to start to describe these different stages that we call them, as the Harvard Innovation Lab has described it, and across the world we have been using it already. It's basically 4 stages. One, when you have your idea. I don't know if a pointer. Not really. So on the left part, you can see how you start using family, friends, and fools, and then you have another set of actors which can go into seed capital. Then you go into accelerators and angel investors, or microfinances if you're talking about debt. So we have like 2 scenarios: one in which you seek for capital on equity, and the other one in which you go through debt. As we call it, venture capital starts when you already have a startup which is growing, in which you already have sales. You are post-proof. Probably you are around 50K on sales and below $2 million. That's the initial growth. And then, but that's what has been called on the blueprint to scale research, the valley of death. To go across the valley of death, in which you basically have been funded by your family or by friends. Probably you have had 20K, 50K to start your company, and then through sales you start growing. Your consumers are your first investors, and to understand sales as investment is very important, because you really have to get market to trust in you before you can ever pitch to an investor. We're not talking about investors on ideas, as we are in Silicon Valley. There's a lot of investors for ideas. Across Latin America, we'll see further on that most of the players are private equity funds looking for investments over $1 million. And then we have the opportunity, but also the challenge right now to build up the ecosystem on the venture capital funds and on an earlier stage on the accelerators. I wanted also to go back to differentiating what is social innovation and social entrepreneurship, because sometimes we get across very nice, very interesting projects which are innovations, social innovations, but are not necessarily a business model. Don't have a product of a service or a service which really creates a sustainability process. So social innovation can be a process of education or public policy. It doesn't mean you have an income or you have a business model, basically. And what we're talking about here is not social innovation, but social entrepreneurship or social business, right? So basically, you have to have a business model. You have to have not only metrics of social impact or environmental impact, but you have to have very clear your financials. Going back to this, and then once you've already crossed like the first stage of early growth, and then you can start pitching into angel investors, and then you are seeking for capital to grow, and then you are basically growing your company, and you're looking for investment which is around 250K on a ticket. That means your company has to be valued or worth around 500K, because the average investor doesn't want to be the majority owner of a company, doesn't want to be the one driving the company, really is looking for a strong entrepreneur driving the company. And then this is very important, because what we've been looking to I'm sorry, this is in Spanish, but what I wanted to show to you was that what is on the investor's mind, what we're looking on a startup or entrepreneur, is a strong set of skills in the entrepreneurial skills and mentality. You know, once you get into a wall, basically, that you cannot go through because you don't have the I don't know, resources, human resources or financial resources what we're looking is for an entrepreneur who is always looking to how to go through this wall, that understands risks and understands troubles as opportunities. That means that the entrepreneur is flexible and it always is looking to how to sort out the challenges. We've already described how we need to have a strong business model. And then we're talking right now on the mechanisms of financing, which is basically equity or debt. And in Latin America, what we've seen across our studies and across the relating with entrepreneurs is that entrepreneurs are still very, let's say, have a lot of misconceptions of what is the investment capital or how to relate into an investor. In Latin America, in difference that what happens in the US or in Europe, which are markets much more developed than ours, entrepreneurs trust investors and are open to receiving investment. In Latin America, we've been growing. It's something that comes from generations before us, and we've built ecosystems of entrepreneurs which avoid getting related to investors or to banks, to debt. Basically, our parents, our grandparents taught us that having a debt is a bad thing, basically. They taught us that if we can do our entrepreneurs, our startups, if we can build them and accelerate them with our own capital, is the best thing that we can do. And that's not really true, because, for example, what I'm showing you right now is that what we've understood in investment banking and on developing the ecosystems of entrepreneurship is that entrepreneurs which only grow with their sales, with their own company, with their own capital, it's what we call organic growth, and it's basically initial growth. But what we're looking for in Latin America, in the Pacific Alliance, across our countries, is that we need to develop rapid growth entrepreneurs, rapid growth, what we call dynamic companies of dynamic growth or fast growth. In Spanish, in some countries, we call it empresas gacela, or basically that grow in a double digit. And for a company to be able to grow in this way, they need an extra boost in capital. And that's where we are in the third stage, that we are looking growth, for example, in average over 20%. And that is basically not only satisfied with covering their local market, but is really looking for markets across borders. We say that these companies which are looking for investment are already 3 years old on average, but of course we've seen very interesting companies that get to this stage in 1 year, 1.5 years. There are exceptions. I wanted to show you this very fast and very general This is like the ecosystem of impact investing in Latin America. These are the players, the most renowned players in our countries. We have here from accelerators to impact investing funds to incubation. I'm going to also to share with you guys, I hope through this, some links of these studies, which show basically that in our countries, the investment capital is growing, that Peru, Ecuador are countries which have the most players. Mexico, Brazil, and Colombia, we have thought were the leaders in this impact investing, and for surprise, with this impact investing study we did with Aspen Network and Andy, have big markets, have big ecosystems, but are not the bigger it's not where we find the biggest investments, let's say. Finally, I wanted to go back to this. What we are looking in the ecosystems in our countries and across Latin America is that we have a challenge on going from the seed capital companies to really having companies playing with the venture capital funds. We need much more collaboration, not only between entrepreneurs, but between accelerators to build up a stronger ecosystem. We are very behind in what is happening in Europe and in the US, where private equity funds have strong pipelines, and we are commonly each year doing IPOs on these companies. In Latin America, we still are just building up our ecosystem on the early growth. This is a very quick I wanted to open up the microphone and have a conversation to know who is in the other line and maybe go deeper into any subject that you guys wanted to talk about.
Great, perfect, Camilo. That's really insightful. I would like to just instruct the audience, if you want to open your mic, you can press the raised hand button and we will open the mic for you. Right now we got Ms. Venegas, Nicte Venegas, that pushed the raised hand button. I don't know if that was a particular, that was on purpose, so if you would still like to make your intervention, okay, you took it out, so yeah. So just raise a hand if you want to make it. So we're going to give the word to Rachel Collymore. Rachel, if you're able to hear us, your microphone is unmuted, and go ahead. Rachel?
Hi, good day. How are you?
Good day. We can hear you. Go ahead, please.
Hi, good day. What I want to find out is how does this apply to service industries or service companies? Because most of the time when I hear about investment is surrounding a product company. So how would a service company who is interested in getting funding for a startup apply for such funding?
Thank you very much, Rachel.
Yeah, that's a very important question. Thank you for that. Because it's true that it's different companies that sell products, that sell services, because sometimes, I mean, traditional banking, when you value a company, you value the assets that you have. Let's say inventory, for example, in products, product development, then you have machines, and then you have, let's say, infrastructure, which helps you value your company. And then when you are a company of services, it's a little bit difficult to do this valuation because most of your assets are intangible. I understand this is one of the challenges that we have encountered when we are from the investor side. And then, for example, what has been happening also is that traditional banking has understood this also when doing investment on early stage of entrepreneurship and not already stable companies, because traditional banking used to value a company, as we've said, through assets, through 3 years of or 4 years of the financial results of the company. You know, it was looking on the past of the company, and that's how you valued or measured risk, valued the company or measured risk for doing, for example, an equity investment or a debt, right? But then what, for example, in Colombia, in Mexico, has been happening already is that traditional banking has understood that entrepreneurs and starting entrepreneurs, what they have are financial models looking on the future. You know, it's not about the past of the company or the 3 years, what have you been selling, but your financial projections or the market investigations that you have. And it's much difficult again, because then you don't have a set of assets. And then this is not only for companies on services, but it can also happen for companies that have products. I mean, when you are a starting company, you don't have big inventories, you don't have a big set of assets, and then what you show to investors or to a bank is your projections. So what I'm trying to say is that from the investor side, we've understood that it's not only this challenge doesn't only exist for companies selling services, but also companies selling products on an early stage. As I've described, these companies have basically intangible assets or have projections and not big assets or big past financial work. So in a nutshell, I mean, and this will happen in every stage and in every sector, you really have to understand who is your investor, who is the actor in which you are developing a partnership or a potential agreement. It's different to build up a relationship with a traditional bank, which it's difficult for them to understand and to build risk models and valuation on companies which are just starting, or working with venture capital funds or accelerators, which understand that the valuation of the company is mostly done on intangible assets.
Right. Perfect. Rachel, I see your hand raised. I don't know if you want to add anything or it was just a mistake.
Yes, I wanted to add something. Are you hearing me?
Yes, we can hear you.
I appreciate what what you have said there. What I wanted to find out, have you ever come across an incident or occurrence where it was a service industry type company and also where you are dealing with people as the assets? Because I'm asking this from the standpoint of creative industries and how that will play out in the creative industries type company where you are seeking investors to look at the company from the standpoint of the human resource that it has, as well as I've also noted that you get a lot of agencies putting out requests for startups and funding, but it's always tailored around tech-based companies. Can you speak a little bit about that?
Yeah, well, it's true that tech sector has been driving the the ecosystem on the past years. In Mexico, for example, the fintech sector has been growing and impressively. Um, but for example, in Peru or Colombia, you find much more health tech or education tech companies being developed. Um, on the industrial and creative on the creative industries, IDB and the OAS actually have been developing a lot of tools for developing what has been called the orange economy, creative and artistic industries. And this slide, which I was in which I was describing how the human resources and the skills of the team are a very important criteria valued by investors. Let's say, for example, Yunus Social Business looks for rapid growth companies across the world, and a company, for example, which sells health services, doctors, basically, for rural areas. What we looked in that case was basically the skills that the portfolio of these doctors had, basically. So what I'm trying to say is that yes, when we are investing in a company, not only in the creative industries, but in every sector, to have a strong team, to have strong resources in the human resources is a very important criteria that is valued when doing an investment. Let's say that it's not only the team, but also if you can demonstrate that this team is 100% committed in terms of time, or if it is only part-time committed to this new startup, that's an important criteria as well.
Great. Thank you so much, Camilo, and also thank you, Rachel, for the questions. We're going to go ahead and read some of the questions that have been coming in the chat. The first one is from Camille Patrick, and the question is, what do you recommend as the best initial source of investment for social enterprises?
Can you repeat please?
Sure.
What is what?
Sure. The question is, what do you recommend as the best initial source of investment for social enterprises?
I mean, I guess what you're trying to say is, what is the best source of capital?
Yeah, and I think what he's asking is at an early stage, which would be the first or the best initial source to get funding for a social enterprise.
Yeah. So I like this infography a lot. because it basically shows us how, for example, when you have an idea, you should search for contests, government contests, foundations, not only because they give away capital in terms of grants, but also because when you are challenged to pitch your idea to someone else, as I was describing before, what you have to show is your flexibility or your mental capacity to come across challenges. What that means basically is that you have to be in love with the business model much more than with your idea. That means basically that when you are starting a company, probably you think that your idea is the best, right? But when you explain it to someone else, when you try to go through, let's say, formulario, right, of a challenge, and you have to explain very simply, very briefly, what is your idea, how your business model works, how are your financials, what is your impact investment, your impact measures, sorry, and you have to demonstrate that your idea really is worth it. Then you are you are challenged to build up trust in someone else, right? So going into a challenge of government or a foundation of acceleration is the best thing I would recommend. Not only because if you do it, let's say with your family's resources or your friends' resources, they'll probably give you the money because they trust in you, not in your idea or not in your business model, right? Or if you put your own capital, that's very important because you're showing that you really trust what you're doing. But then to have a third party coming in, valuing your business model, and putting in capital to it, it demonstrates that it's not about you, but it's about your business. I hope this makes sense.
Definitely, definitely. Thank you for that. And yeah, if I may add something there, I think competitions such as the one that YBT lead are very good in terms of getting seed capital that does not require you to give out equity of your business. So it might not be a really big amount of financing, but it's something that you don't have to pay back, and it's something that, as I said before, will not have an impact uh, on the equity of your business. So, Camille, I don't know what region are you, but if you're from the Caribbean, you can of course apply for the Caribbean Innovation Competition, which is part of the TIC Americas, the hemispheric competition for startups that YIBT does in Latin America and the Caribbean. And one of the things that you get from the competition, if you were able to reach the finals and win one of the categories, is seed capital. So that's always a good place to start. Of course, we would like to promote TIC Americas, but there are other competitions that you can also apply to and have access to some of that seed capital. Let me go ahead and go on to the next question for you, Camilo. This comes from Jaime Lezama. He's asking, what's the average equity investments percentage in Latin America for early seed investments? So I guess what he's asking is like, what's in average the percentage of equity that funds take from social enterprises, social businesses in Latin America?
Yeah. Before answering this, maybe the last question also wanted like some specific opportunities, and then on that sense, I mean, I gave you my Twitter account, which is @Camilo Santa. I can help you, depending on which country you are in, put you in contact with accelerator programs, hubs, challenges in your local area, which can in which you can put your business model to a contest. The Impact Hub network across the Latin America is also very interesting to look for opportunities. And going into this question, we've described the ecosystem in 4 stages, right? So when you are in the discovery, or I'm going to show you this slide. I'm sorry. So on the first stage, which we call concept and idea or incubation, you find grants, and you're looking up to 20K, basically, at the most, $20,000 US dollars on grants to start up a company, right? Then on the startup level, when you look to angels and seed capital, and then you're looking from 50 to 100. That's the valley of death. That's the difficult part of the ecosystem, because you have to. There's not so many actors putting in these amounts between 50 and 100. Okay. Then you go to on the growth stages, and then there's where you find the most actors playing, which are tickets around 250K. This means that, as I was saying before, your company has to be worth, or has to be valued in $500,000 in order for receiving 250,000, and that it doesn't go over the 50% of equity. If that makes sense, basically, if I have a company, if you guys have a company of 500,000, then you are able to receive 250 for 50% of your company, right? If you have a company which is valued in 100,000, then the most that you can receive is 50,000, because you don't want to get over the 50% of equity, right? Nor the investors, nor the entrepreneur. And then on the later stage, we are already talking about deals over $1 million. This in a very reduced and general optic. And if we're talking about debt, basically what we're discussing is that you find debt on the early stage, which is around 25% of interest per year, which is very expensive capital, right? Then when you move towards the growth stages, you can find between 15 and 12%. And then when you are in the later stage, you'll find debt on 10%, 7%, maybe even 5 or 4%, which is bonds and much more sophisticated tools, financial tools for your companies. But what I would recommend is that On an early stage, you look up for grants of around 10 or 20K, and don't get into debt very early. It's better to get into debt. It's important to have debt in your financials because it shows also how you leveraging risk, and for an investor is a good way to show that you are also risking putting your companies and your capital into risk.
Perfect, perfect. That's really good information. We're heading towards the end of the session, and we have just one or two more questions. Very quickly, Camille asks, well, she says that she's from Trinidad, and then she says, you mentioned targeting foundations, but the knowledge of certain trust funds or etc. is not readily available. What is the best way to access such information on trust funds?
Like getting to know trust funds, basically.
Yeah, so knowing the options that are out there and which she can maybe contact and have an interview with to see if it's a good fit.
Yeah, so I hope you're seeing this slide in which you can find like a interesting group of actors playing in the region in Latin America. Um, the idea of getting in touch with trust funds, if you don't have access to local trust funds in your region, maybe the best thing that you could do is look to get involved with accelerators or incubators, because they'll probably have a strong relationship of a network with the different set of actors in the different stages, right? So what I would recommend is to get involved in the ecosystem, look into incubators, accelerators, maybe from the government, maybe local, in your mayor office, they'll probably have information of which are the international and local actors playing in your local ecosystem. For example, I know that the IDB is working very strongly in Trinidad and Tobago on creative
And
industries.
that's the Inter-American Development Bank. Yeah.
Yeah, exactly. I'm sorry. The Inter-American Development Bank. The Contest of Demand Solutions, for example, has a strong relation and work flow in Trinidad and Tobago and the Caribbean as well.
Sure, that's really true. The Caribbean Innovation Competition, it's part of the REACH program, which is one of the IDB's, the Inter-American Development Bank programs that specifically focuses on the Caribbean. So I would definitely recommend echoing a little bit what Camilo was saying, Camille, to research what the Inter-American Development Bank has regarding funding in the Caribbean, because they do a lot of work there. Okay, so we're towards the end of the session. Before we leave, Camilo, they're asking for contact information. They want to get in touch with you. So I know you shared with us your Twitter account, which is at Camilo Santa, and also the Banca Sostenible, which is B Sostenible. They're also asking if they can get your email. If not, they can directly contact you through Twitter, I guess, right?
Yeah, I mean, you can send me an inbox through Twitter, and we'll get in touch, and I can help you. I would invite you all guys to look to the Banca de Inversión Sostenible in Facebook and in Twitter, because what we're trying to do is to boost up the ecosystem of impact investing on triple bottom line businesses across Latin America. Through the Pacific Alliance. We're partnering with YABT, World Bank, in IDB, and a whole set of different set of actors. And we're basically doing this agency between trust funds, venture capitals, entrepreneurs, accelerators, basically facilitating this collaboration between actors. So please get in touch.
Okay, Camilo, thank you so much. This has been really interesting, some really valuable information for our entrepreneurs in the region. I want to thank you for being with us today and for everyone that was here in today's session. I reminded you that this session was recorded, so if you want to go back and uh, look at the session again or check out something you wanted to specifically see in the presentation, you can access it through the YIBT Bootcamp platform. Remember, you can, and I will take your screen right now, just a moment, so I can show you where you can go. Okay, so you're looking at my screen now, and you're going to be able to go to all of this videos at ybt.net/bootcamp, and you're going to check out the different videos on different categories such as project formulation, marketing, financial management. This session will be uploaded there. You can also register for future webinars, and of course have access to all the information. So last but not least, Camilo, thank you so much for being with us today. We're looking forward to the next session, and thank you very much, all of you that have been part of this webinar. Goodbye.
Thank you. Bye.